Hey guys, Blackwatch here. Just gonna do a quick video for you tonight. Obviously holiday weekend. Everybody hopefully is taking a nice relaxing break this weekend, or at least putting in efficient work hours and trying to study and all that. But just, make sure you take your breaks, because it's important not to burn out and that kind of stuff too if you're still studying. But yeah, so we're just gonna start off on Monday. I'm gonna focus on just a handful of setups. I don't want to drag out the video too long, but yeah, let's kind of see what we get. We'll go from there. But we will start on Monday, because there is some decent price action early in the week. But what we'll do is from the 4 hour, we'll look at the daily first of all. Right. Again, we know that as of now, supply is in control, right? Ever since we basically wicked this high, we've had bearish daily structure. There have been times that we had some pretty significant pullbacks, but overall, like, supply has held pretty well. So more recently, right, in terms of this week's price action, we ended up taking out this low right here. And as soon as we took out that low, we ended up having a pretty significant retrace or pullback, right? Which again is typical. Usually counter trend moves happen after a low is taken, right? You can see it pretty much everywhere, really. You can see it here, low takes, we get the pullback, right? Here we get a nice pullback into the supply off the demand. It's totally fine, is what it is. But you can see again, right? Once the low goes, we get that deep pullback. Once this low goes, we get just a shallow little pullback here, but that leaves kind of like the supply zone open for later. Eventually we get that pullback. I think it's because we react off of flip zone demand, or supply demand here, reaction, and then that deep pullback. So, and then of course we took out this low and we started to get that retrace to the downside, took out another low here. And each time we take out a low, we're just taking out like massive liquidity. So we're getting that pullback, and we'll go to the 4 hour. I'll just mark out some of this supply. So we had a supply chain, right? So we had basically demand here. That's our initial reaction. This price doesn't react to that. This is reacting to more of the range, this larger candle here. And then what you see is this reaction. It gets swept, right? And then from there, we can see we had some pretty significant wicks just into the supply, and then we started to chain. All right, so just mark that up. And I'm just gonna mark it where it reacted, just to keep the charts clean. All right, and that's fine, right? So we had this 4 hour supply chain wicks. I think it actually taps this as well. Right, so inside bar, and then pretty much everything that's going on here is just range. But we have a pretty significant supply chain on the 4 hour. And then, yeah, again, we took out that daily low, and that's when we start to see price weakening, right? We saw this bearish trend more or less starting to fail to break the lows, right? We started to get these wicks and then deep pullbacks, and then eventually we got the closure just right here before we actually got the full pullback. So that's kind of what the 4 hour looks like for here. I'm going to find Monday's price action real quick. Where is it? This one. Right. This is our Monday. Right. Let's go ahead and bar replay. We'll go back into here. And right. So now what I'm doing is, I know that we just took out this daily low, right? So if we wanted to trade counter trend, what we would do is we would take the potential sweep of liquidity. So we could see this as a sweep of liquidity, right? Depending on what price does. Now we obviously have price pushing to the upside. This is our first level of supply that fails, right? It's not a structure high, it's just supply, right? This is just an indication. We technically have these buy to sell wicks as well, which is another supply zone, so another indication that price is going to want to trade potentially higher from that level. I'll just mark this out just to mark it, see what kind of reaction we get. All right, and then of course we have the 15-minute extreme. All right, so we will see kind of what happens here on Monday on the lower time frame. What I would be looking at from an intraday perspective is that, given that these supply zones have failed, if the lower time frame sets up and indicates that it wants to trade higher, I will do that. I've said it plenty of times before. If I'm going to trade counter trend, I want to see demand fail, right? If supply is in control, our best pullbacks are going to come when demand actually fails. So we have that demand failure, and we have a couple POIs that we can look at. You can see that price is reacting off of this demand right here, right now. But this demand is not really reacting to anything itself. So for that reason, I don't really care about it too much. It's definitely a POI, definitely something to keep an eye on. But right, if we're following the idea of internal range liquidity, these demand zones in the middle should just be liquidity, right? So we might take a low, it might pull back. We might hit a demand, we might pull back. But ultimately speaking, we want to focus more so on the initial flip and the extreme and kind of see what we get. I'm going to play price forward just a little bit. Okay, obviously this zone absolutely gets destroyed. And one reason we can say maybe why is that it's a flip zone. It doesn't sweep any liquidity, so we can rule this as liquidity. So now what we want to do is we want to go to the 1 minute, and we just want to find that price action that kind of runs in our favor, right? We want to see this bearish momentum, heavily bearish momentum, turn into bullish momentum and give us reason to justify longing from this extreme demand zone, right? That's all we're looking for. So just play forward, right? So here we have our first indication the price wants to trade higher. It just barely takes that high out, right? Just barely. All right, I'll move this sweep away over here. Excuse me. Right, it just trades higher. So we have a pretty good idea that this demand zone wants to hold. Ideally, what we would see is we would see a first level of respect, or just a level of respect, meaning that this being our new demand zone, right? This is a reaction from this demand zone. We'd want to see price come back into it and then give us again another bullish movement, right? Because it's possible that we might get price to take this high and then it comes up, does a little bit of this, and then just keeps trickling through it and dropping down, right? Just because it's a demand zone doesn't mean it's going to hold, right? So we have price doing that. We're looking for the reaction, right? And one thing we can see as well is, again, we have supply here. Our reaction is this wick, and that wick, this is our sell to buy wick. There is no liquidity, right, from the flip itself, so we can expect price to trade lower. This would be indication to take this as a trade, but again, if we want to be more conservative, we're going to wait for that actual reaction. So we're going to let price play into it. We're going to be patient, right? I said this in one of my other videos, that you want to be kind of like a spider, right? A spider sets up a web. It waits for the food to come to it. It doesn't go hunting for the food. I'm sure some spiders do, but generally speaking, right, you want to sit in this zone, right? You want to be waiting for price to come to you, and then you want to attack it when it's necessary. Now that price is in the zone, I want to say, okay, well, where's my valid supply? Where can I look for price to fail, and then from there, where can I trade from? Now, if we look at this again, right, we had supply, that's the reaction. This sell to buy was our demand. You can see that this candle here just pulls back. Why does it pull back? Well, for one, you can see it takes the low of this flip here, and then that sweeps out liquidity and price trades up. So now, because this candle failed to trade below this, this is my supply, right? So I can do one of two things. I can mark it up as supply itself. I'm more interested in the high failing, so I'm just going to mark the high, right? The reaction is important, but I really just want to see the supply fail. If I can get the supply to fail, then I know that I can trade from this. Did that fail? Hasn't failed yet. Looks like it's building liquidity. So at the moment, the supply is holding. If this low fails, I don't necessarily want to long it until, again, I see the same thing. Maybe there's something else down here to the left that it wants to mitigate, right? I just want to make sure that that's going to hold. All right. So one thing that I think I failed to do is that when price took out that high right here, when it made this new low within this demand, I failed to mark out this high. This should have been the entry right there, right? Because what we have is we have this demand holding and then making a supply failure. So at the time this was our supply, it built new supply, that supply then failed and then trade higher, and then yeah, so completely misread that. So right, in a live market it can happen the same exact way. In this case I misread it, but however this would have been the entry for this trade here. Could have entered here. 2.5 pips, pretty healthy, but I would definitely want to cover that low. 3 pips is good, right? And then what we're going to look for is we're going to look for some 15-minute supply, right? Where will we run into issues, right? Where's our first barrier, right? If this fails, the rest of this should be internal range liquidity and maybe just catalyst for pullbacks. And then from there, what we can do is we can look for additional entries. So what I'm going to do is I'll mark that supply. Mark this up as a CPB. Mark that up as a CPB as well. If you don't know what a catalyst for pullback is, CPB, look at the video called Anticipating Pullbacks, and then also study internal range liquidity. That stuff there will help you find continuation trades. So this obviously is a high that we need to concern ourselves with. It's also potential equal high, so we may see a pretty significant range or pullback after that, right? So that's what we'll keep an eye on there. So what I'm going to do is I'm going to go back to the 1 minute, look for an entry, possible continuation. We can say that we missed this, right? Because we did. That's fine. All right, so pretty significant pullback there. All right. Theory, it should trade higher. Yep. All right, so now price is within this range. Technically on the 15-minute, right, we were bearish in this immediate range. However, this is our indication that price may want to trade higher. So what we're looking for now is we're basically looking for price to turn bearish. If it wants to turn bearish, I'll take a short, right? Because again, we still have pretty significant bearish momentum. So we'll go back to the 1 minute. We'll look at this. Now, if price hits the supply and just keeps trickling to the upside, might want to look for longs, right? But we'll look for the same thing, right? So we'll look for price to more or less hold at a level of supply. So again, price hit it and it's just trading, excuse me, it's just trading higher, right? So here I have a little bit of supply holding. I'm just going to move this to the side. So what I'd like to see is that supply fail and then price potentially trade back into some of this because it looks like it's chaining a little bit. So there's a failure. It's not necessarily a body closure, but again, wicks, lower time frame, those are body closures. So we do have a bit of a demand chain starting within this, right? So we can look to potentially trade from this. If you say, oh, well, maybe this is a little too aggressive because it's so high in the leg, it's still in the supply zone, reduce your risk, right? You don't have to trade it by any means, but this is a potential scaling opportunity if you miss the trade below. So there we'd be tagged in, looking pretty bearish. This could have just been a sweep because this did actually take this high, right? But doesn't matter, right? If you're in it, you're in it. The fact that it took this high is also an indication that supply might not be in control anymore. So let's just say we're in it. If we take the loss, we take the loss. 2.5, we just cover these lows here. All right, we'll have to manage price as it approaches these 15-minute supply zones. But with this one failing, these should not give too significant of pullbacks. Right, there's that. We get to break even real early on this. And if it comes back against us, we're safe, right? That's a 1 to 2. You get to break even at 1 to 2, right? So what we'll do is we'll just watch price forward, see how it interacts with these zones. There we get our reaction to the catalyst for pullback, number 1. A pretty big pullback, but that's okay because we're safe, right? We'll rip it forward. If it remains bullish here, that's a good sign. All right, cool. So we take out the high. Now that is typically a good indication of what we want to see, right? Price hits the supply zone, right? This supply, but it remains bullish. That means we can still trade longs, right? So now it's got a lot of momentum. And if we look at the 15-minute, our 15-minute POI is way down here, right? So we can keep trading with this to see if price wants to trade through it with that momentum. Now, what we would ideally see is at least 15-minute buy to sell wicks, which is what we get right here. So I'm going to just mark this up as demand, go to the 1 minute. All right. And then now we have basically price within this. Now what we see here is a buy to sell wick off of the CBP. It doesn't, let's see. I guess, I'm trying to think. Does this sweep anything? Sort of. Right, so this is where that attention to detail is going to come into play. You have this wick. I'm just looking at this, right? I want to know why price came down here and then stopped and then pulled back. Like why did it decide to stop right here? Right? Why did it target this right here? Well, that to me would indicate that that is a valid demand zone, a flip zone, and because it doesn't take liquidity, it's then used for liquidity, right? So that gives me a potential POI right here, right? So it's below this demand zone, this 15-minute demand. But again, if we look at the 15, it's just a buy to sell wick that doesn't take liquidity. So it's possible that price will hit this, come back, take this liquidity, and then trade higher. Whether or not we want to trade directly off of that is another story. I don't think so. I'm just gonna mark it as a demand. If we can get a demand chain off it, then I'll trade that. All right, so again, we're still pretty bullish. We haven't really done anything that would warrant shorting, right? Not yet anyway, so we'll play it higher. Okay, so now we've hit this catalyst for pullback. All right, we still have this 15-minute, right, which is buy to sell wick, and we have this below, which is would be the POI for a potential sweep. Right. Price is trading lower, right? So now we're getting that push to the downside. Now remember, just because this demand failed, just because we hit a supply zone, doesn't necessarily mean we're trading short yet, because technically this is in the middle, right, of this leg, right? Our supply has failed here. The supply has failed here, right? This is an indication that price may trade higher, right? Because again, we took out the daily low, demand is holding here, we took out this supply, we took out this supply. This supply here, there's a good chance that it's not going to hold, right? But again, we're just looking for confirmation. If it wants to trade short, what I need is that level of respect. I need the lows to keep failing and supply to keep holding. So for right now, we're looking potentially bearish, but understanding that this is more than likely just a catalyst for pullback and longs are in play, I'm just gonna see what I get, right? That's the idea. So play it forward, right? So now we're in this demand zone. I'm gonna remove that just to clean it up. Okay, so we're starting to hold, right? Because we're coming into this sweep. Price is trading higher. All right. Now here's kind of the moment of truth, right? We have this demand, right? Where's our reaction to that demand? It's this wick right here. Now what happens to that wick? It doesn't sweep anything, so it gets swept, right? We know how this works. It gets swept. So now, in order for supply to be in control, what I need is I need this supply to hold and give me lower prices. And then I will trade from this one to trade lower. If it doesn't do that, and it trades higher, that tells me that demand is still in control and that this is just a catalyst for pullback. So we'll mark this up as supply, right? But we have to be aware of both sides of the market. Understand that the order flow for the day has been bullish, right? We're not going to just short it just because we're getting a little bit of bearish price action. We need confirmation. Right now, all we have is confirmation that price wants to trade higher, right? And this is a potential pullback. So we need it to take the low, right? And then the high fails. So to me, this means the demand is holding, right? We even have a bit of a demand chain, right? However you want to mark it, right? So now we have a demand chain, and excuse me, supply failing here. So now what we can do is, because this was a potential valid supply, right? What we can do is we can say that this high failed. This is a demand chain. If I want to trade long, I can do so from this POI, because that is part of that demand chain, right? I hope this makes sense to you guys. Now, the tricky part is, right, is if I would like, well, this high failed here, so it should be enough, right? This is our bearish pullback now turned bullish. It should essentially go like this. It would be nice if this high broke, but you know, maybe this is one of the ones that you can drop your risk on. All right, so I want to see that high fail. Doesn't look like it's going to fail, but we'll place an order on it anyway, right? And we'll just make sure that we cover our risk, right, from this high if we get tagged in. Break even. So we just built liquidity. That's a good thing. So we tap in, just barely. Okay, there we go. Now we hit the EQ. And if this little high right here fails, I'd be pretty happy. Oof. Are we still in this thing? Alright, so I have it on here as a 2.7 pip stop loss. We would still be in this. In reality, I would have 3 pips, but either way, it works out fine. Yeah, I want this little high right here to fail to make me feel better about this trade. Alright, so that's good. So now, we can't break even yet. Okay, now we get to break even. Breaking even at 1 to 3, right? So you get to break even early on a lot of these trades. We're still in this one, right? Now that we've taken out this high, there's probably a good chance that we'll pull back. One thing I do want to check is the 15-minute. Right, I think we should probably, let's mark up our flip there, right? Where's our reaction to this demand? So you have this inside bar. I'm going to do a sell candle because there's no reaction to the inside bar, right? It's right here. I want to justify this. So now we have this 15-minute supply. I'm just going to go from this low to this, to that high. This might be the only trade I cover. I did want to make this short, but there's a lot. This is a good trade. There's a lot of info in this. All right, and again, in theory, this should just be a catalyst for pullback. This one is one as well. CP, right? Why? All of this is just internal range liquidity, right? Knowing what is internal range liquidity and what is an extreme is what's going to help you build confidence long term in holding through adverse price action, right? A pullback would be adverse price action. It's going to make you feel something that you don't necessarily want to feel, right? It's going to make you feel nervous and it's like, oh shit, what if it comes back and takes me out? What if it does this? What if it does that? Partial out if you want to, right? There's nothing stopping you from paying yourself. But the biggest thing is understanding where you're going to get reactions from, right? And for me, it's these 15-minute zones. You'll see this on the 1 minute, right? But if you're staying at the 1 minute, you're just going to cause a lot of trouble for yourself. Understanding that internal range liquidity, right, and catalysts for pullbacks are best served on the 15-minute, right? As intraday traders, we should be focusing on 15-minute highs, lows, supplies, and demands, and then going to the 1 minute just for entry, right? It's like Tricky said in his last video, right? The 1 minute is for execution only, right? This is how it should be. If you're a scalper, it's something different. There's nothing wrong with it, but you just have to have a scalper's mentality, right? You got to know when to get in, when to get out, when to expect your pullbacks. Same thing as the 15-minute. But as intraday traders, we want to maximize our reward, right? We want to make sure that when we get into a good position, meaning it's well priced, that you hold it as long as you should, right? And again, that's going to be subjective. That's going to weigh on people's minds differently, right? But understanding what I'm telling you now in internal range liquidity, catalyst for pullbacks, this is the stuff that's going to help you manage long-term trades. Whatever long-term to you is, you know, whatever. It could be a couple hours, could be a couple days. Anyway, so yeah, so now we have a couple of catalysts for pullbacks. We understand that we could get some nice reactions off of, and by nice I mean decent reactions, like volatile reactions. And if you're in longs, probably won't feel nice. Let's go to the 1 minute. Oh no, 1 minute. All right, so here, right, we have this big old supply zone, right, and we can say, okay, these are not well priced, right? A well priced trade would be this one down here, which is kind of unfortunate that we missed. We can pretend that we took it, whatever, but you know, we didn't, so never mind. But yeah, so these are not exactly well priced. They're a little high in the leg, all right? So it might be good to pay yourself. You're able to catch 2 of them, so maybe this one you full TP on, right? Maybe this one you full TP on, whatever it is, right? This one's got more money on it, and this one's got less, right? This is 9R, this is 5R. Maybe it's better to bank this one, pay yourself handsomely, and then let this one run, right? If it wants to run, it can run. Is there, I want to go to the 4 hour and just verify what I got going on. So there is a 4 hour supply within this as well. Let's just make sure we assess all our time frames. 4 hour supply. This wick, I might cover that wick as well. It's also part of that 15-minute CPB. Let's just see what happens when price gets there. So again, 15-minute, that's that. And then 1 minute. Right, let's say we TP on this one 10R or 9R, and we're happy with that. There's a 4 hour supply, there's our 15-minute supply. This would be another 10R if we can hit that, right? Excuse me. All right, so we hit the catalyst for pullback, right? And again, we start to push a little bearish, right? And if you're trading chalks, you'd probably be fucked because, I don't know, it's just a chalk, right? Take that high, you take this inside bar low, right? And then price does what? It just trades straight through the high, right? So again, right? Understanding what's a pullback versus what's going to give you an actual reversal. You want to pay attention to extremes and flips, right? That's it. But don't take the first sign of bearish price action off these zones, right? You need the floor, the what do you call it? The level of reaction, right? Okay, so now price is pushed higher. This is kind of nice, to be honest. Supply, right? This little bit gets swept. Oops. And then you have this guy here. Although we haven't really looked at window of imbalances, they haven't really been playing out too much. Well, except for this one. Apparently this came off a window of imbalance off this flip. Got it. Okay, go figure. All right, so yeah, there's a window of imbalance here we got to keep an eye on, but there's a nice little POI right here, so I would gladly hit it if it came to that, because there's a sweep, so there's a lot of reason to take it. And then price is just trading higher. Four zone, wick covered high. Yeah, should be fine. Oops. We did just take out the liquidity of this high right here, so we should get a pullback as well. We didn't get much of a pullback after taking that high. That doesn't mean it's not going to happen here. We should see something big. Hopefully off this 4 hour zone. Anyways, all right. So this is all London stuff. I don't even trade London, so I wouldn't have taken any of this, but regardless. All right, so here we have this. Okay, so we have price coming off of this demand here. Okay, so it hasn't failed yet, actually. It still could hold. This might just be liquidity. Do I have a POI? Not really. Okay, so now this demand has failed, so that's interesting. So we haven't hit anything that I've got marked up. I must be missing something, right? here. Now it's going to come into this. We have an error POI. Let's hit this. This is London lull. I'm going to take this high. So this demand failing and this supply holding, if price can pull back, I'd be really cautious with this one here, right? So the fact that we're in a position here and it's pulling back here, right? Not very far after. This is where like subjective management needs to come into play. Yes, I have a POI up here that I want it to hit, but we are starting to see a lot of bearish momentum after taking out this high here. My position's right here. I'm currently sitting at 5R. I'm really happy with 5R. I don't want to see 3R. I don't want to see 4R. I don't want to see break even, right? I've already TP'd on this. I'm 9R. I'm happy. I'm in profits, but this could be a 15R day if I close here, right? Or I could be greedy and say, you know, I'm not going to do anything until it hits 10R. Or I can partial it out, right? I think the safest thing to do is, again, super subjective, is to just take 90% off and let 10% ride, 50% off, let 50% ride, whatever it is, right? If you take these two trades, you're done for, depending on your capital, you're done for the week, right? That's 9R, 10R, right? Or in this case, 5R, right? It's like 14R right there, right? That's 7% if you're trading 0.5%. That's very good. Most people want 5% in a month. Remember that, right? So anyways, we'll just play this forward. There, we're in here. We're not seeing bullish price action though, so I think we're gonna take a loss. Yeah, all right, so there's a loss, right? And you just gave back some money, right? So now we've got a position in this that looks like it's probably gonna get taken out, and that one's paid, this one was a loss. So now we're starting to give money back, right? This is where things get kind of hairy and you're like, shit, I wanna keep trading it. Should I short this now? Should I do this? Should I do that, right? Typically, when you've taken 3 trades, a winner, potential mismanage, but it could still be a winner, right? Don't let it come all the way against you and lose all that money, because it's money on the table, right? If you peaked at 10R and you close it for 3R or 3.3R, like that's not good. That's not great management, right? So keep that in mind, right? Just pay yourself. One of the biggest things with trading this way is that we get in our own way. Like we have this ego, right? Whether or not you believe you have it or not, right? It is somewhat egotistical. It's just this idea that you know exactly what price is going to do. That price is going to hit the supply zone. It doesn't have to. It could come back for it later, right? It does not have to. So we need to keep that in mind, and we need to understand that we just need to pay ourselves, right? Because at the end of the day, when you've closed this trade for 6R, 7R, 8R, 9R, 10R, when you're looking back at this next week or the week after or the month after, you're not going to remember anything in here that happened, the emotions of holding through this. All you're going to see is that today there was a 4R trade or there was a 10R trade, right? Just focus on your long-term profits, right? So just pay yourself. It's fine, right? And whatever decision that you decide to make, it's not always right or wrong. Just make sure that you understand why you're doing it, justify it, and be okay with it. Just accept it, right? All right, so yeah, we took a loss there. We mismanaged this one maybe a little bit, and we took it for 5R. Cool, fine, whatever, right? We're starting to see that bearish momentum. I want to go back to the 15. I want to see if I have a 15-minute POI, which it looks like I do. So just mark that up there. All right, and we'll see if there's anything worth trading from on that 15-minute. Excuse me. Of course, we get that pullback. Now, what's that pullback tapping into? Demand, reaction. Looks like it's coming into this flip zone here. This flip zone doesn't take any liquidity. This takes the high of this 15, but I would have liked to see maybe this get wicked. Like if this high got wicked right here and then did this, sure, I'd be into it. But the other issue is that this is our initial our initial reaction to this demand, and that POI is way up here. So this for me, I don't think I would trade it, but it looks like we're getting that reaction off of that. And that large wick, that's like pretty significant rejection. So this is probably going to take this low. Yeah, let me take that low. And we're just bearish. So this 15-minute gets demolished. What else we got? This one. This is kind of our first little flip area as well. Let's see what happens here. Tap it. Now I want to see some bullish momentum. All right, so that's a good sign, right? There's a good sign because price pushed up, it pushed down, it failed to continue lower, and now it took out this little substructure high here. Now, ideally what we would see is we would see that high get taken out. So I'm going to mark this up as supply. And it looks like it wicked it just by a hair, so that's cool. It's not enough for me to trade it, but I want to see, I'd like to see demand hold probably. Oh, you know, I took a loss here. Yeah, I took a loss here. So, okay, so this is what, if I remember correctly, supply reaction, right? Now this was my issue. I saw this low here as a sweep of liquidity. So my rule is that if we get a sweep of liquidity before the flip, we don't need liquidity in the flip. So I saw this demand chain. We got the failure of supply. And then I saw this little POI right here. And I threw a trade on this. I remember I was kicking myself because I was like, walked away. Because again, I don't sit at my desk when I've taken a trade or have a limit on or anything like that. Because I know myself too well. I know that I'll try to get in too many times. I know that I will mismanage the trade if I sit here and watch it. It's just, for me, I just know it's a bad idea, right? So I wasn't at my desk, but I thought to myself, I was like, the extreme looks really good because there's no sweep here. Just because there's sweep to the left, there's still the potential for price to trade at the extreme. The extreme is always valid, no matter what. So I thought about it and I said, you know, whatever, I'll just let it go and whatever, right? I think at this time I was getting the kids ready. This is about 7 a.m. Yeah, and they get ready. They get out of here by 7:30. So, yeah, I was like, I placed the order. I left, helping the kids get ready. My alerts go off. I'm tagged in, and then yeah, like just immediately just ripped straight through me. I think I got slipped by a hair. It wasn't much, but it definitely wasn't a full 1%. It was definitely a little bit more. So that slipped me, and then it tagged into this, and then it just. Yeah, it just kind of went. But it's kind of a bummer because, you know, actually I don't even know if it matters. I'm trying to remember. Let's just play it forward because I'm pretty sure that it didn't actually work out that well. Right, so that would have been the break even if I traded from the extreme after it took this high. This held at this demand right here. Excuse me. All right. Let's see though. We got supply. See if there's another trade. I don't really remember what happens here. Reaction. Sort of a sweep, I guess. Demand chain. Potential POI right here. What's the 15-minute look like? The problem is we took out this 15-minute low, so I'd be a little hesitant to continue long because it looks like it hit this 15-minute POI, and then what happens? Yeah, it kind of drops. All right, so here we don't hit that demand yet. We hit the window. No window, just reacting. Price trades higher. Yeah, and then this just gets wrecked. Okay, so I'm trying to remember. Yeah, price is really bearish. All right, so we take out this low. When we pop back up, we take out this supply zone right here. I don't think I would enter off here. At this point, I've taken enough trades during the day, and I'm honestly a little confused by price action. So I just wouldn't take anything, and I just got licked there. So honestly, 2 losses right here, right? And then these 2 winners here. I mean, again, I'm just showing price action, but generally speaking, if I was trading this live, my day would be well over by now. And I'm also, again, I'm a little tossed around by price action. We've taken some highs, and then we've gone and we've taken some lows. My guess is it's probably a sweep of liquidity. And yeah, I mean, it might want to trade higher. Let's just see. All right, let's see. How long is this video? 40 minutes. God damn, I can't make a short video to save my life. All right. This is only Monday. All right, so reaction, demand chain, definitely a sweep, right? If anything, it's probably going to go off here. But again, I don't really know how I feel about the day, so I'm just going to leave it alone. Let's just play it out. Of course it goes. We'd be broken even. And would we break even? No, we're safe. Now we are out of my session, technically. Where does price go from here? Wait, do I have any 15-minute? So we have this 15-minute supply now as well. And again, like I said, like we were pushing bearish here, so there's a potential for price to just trade lower from that. So let's see what we get. Not quite. Oh wait, it came off of this though. Okay, so hold on. Go back to the 15. Right, 15-minute wick, 15-minute reaction, took out this high, 15-minute bearish price action, 15-minute POI here, not hitting it. We're coming off this wick. All right, so we do have a potential setup here. And what I'm seeing is this, and again, we're out of session. But this swept this high, and we have a reaction right there. So, you know what? This would be for the gram. Let's go. All right, we'll hit it. Whatever. We are in. We are broken even. And then, yeah, from there, we just kind of see what happens and hope for the best. Man, I'm tired. All right, so here we are hitting 15-minute demand. Yes. Again, not really sure what it wants to do. A little confused by price. I would just go ahead and just cut this off. 7R, I'm happy with that. Full 1%. Shorted again. Oh god, no. TP. Yeah, and this is like spread hours and stuff. The day is gone. Alright, cool. Yeah, so that, I mean, that's Monday. I was hoping to do a little bit more price action than that, but yeah, it just didn't happen. That's alright. I hope that's good enough for you guys. I hope you guys like that. Oof, we gotta look at this though. Real quick. Let's see what the setups look like. What? There's definitely some price action in there. Yeah, I remember this day. I feel like it broke even twice here. So yeah, we hit that supply zone, that 15-minute. We got this demand reaction, right? And then because we had this sweep right here, right? So price traded higher from this. Supply got hit, price traded lower, price pushed up, took out this high. I consider that a sweep. Price then reacted off of this demand, pushed up, tapped into this supply right there, right? So we have a bit of a supply chain. and then price came back into this guy, and then I got in there, price took out this low, and then it broke me even, right? So I took this one, I broke even on this, and then there was a pretty nice setup here. So we had this high, got wicked by that, so that was our sweep of liquidity, and then we had this demand right there, react. I told myself that I was done trading for the day, and then yeah, basically set up and just went to the downside. Maybe I would have broken even on this. All right, so we had this as the initial reaction, or the initial trade, and we would have gotten away with a decent amount, but then we had this as our basically our chain, right? So there's an additional opportunity to get in there. But yeah, that's it for now. I hope that helps you. I know I went into a little bit of internal range liquidity, catalyst for pullback stuff, but that's the that's kind of the bread and butter of this trading. Entries is one thing, but like management is a whole other thing. If you can get your head around internal range liquidity and catalyst for pullbacks, you're going to be able to find continuations. You're going to be able to hold your trades longer. You're going to be able to anticipate pullbacks, so you know when you're going to get unfavorable price action, right? All this stuff's super important. Anyways, I hope you guys have a great weekend, and I will catch you guys next week. Yeah, see you guys. Bye.